What's up, YouTube? Welcome back to another video. In today's video, we are going to talk about dividend stocks in a down market or a recession and what you should be investing into and what you shouldn't be investing into. So with that being said, let's go ahead and jump right into this video.
I've been getting dirty money.
Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's going to help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. Full-on disclaimer, I am not a financial advisor, or will I ever be, or will I ever want to be. You guys all, if you are new to the channel, you know I only invest my own money, and I've been doing it since I was 18, now 25. Since then, I have been a trader full-time. It's been great. Thank you for all of the people that have supported me through that, and the people that haven't, well, thank you as well. With that being said, I want to go over today what I think is pretty important with everything going on in the world. Yes, I'm sitting in my car, and I'm going to throw some videos and pictures up along this and link some stuff down below for you guys to all see. But should you guys be investing into dividend stocks or growth stocks or long-term stocks while this market is on the downturn? Now, why I say that is because, well, Friday was probably the worst day I think we've had in months. It was like down 4%, or no, maybe it's down 3.5%. Either way, massive red day on a Friday. Nobody ever wants to see that. It cut out a lot of stops. It made the intrinsic value of a lot of options go way up all of a sudden. And it took a lot of people's money, actually. And that's one thing that a recession is going to do. It's going to tighten the market. Right now, or for the past couple of years since COVID happened, no, I don't have COVID, is the market has been expanding. The real estate market has been absolutely red hot. If you have been in the South or if you've been up north, it doesn't even matter. It's been absolutely insane. And it's been a great place to invest money into. Is that going to continue to be the same thing? Now, as everything contracts and goes back to people spend less money, CPI reports have been coming out, which is Consumer Price Index, where they show the pricing of everything, has continued to go up because of course, what everybody has been talking about, inflation. Now, is that a bad thing? There's always been inflation, but not at this rate, obviously. The other thing is where do you put your money and how do you safeguard your money? Just so you know, there is no actual safe investment. Now, what do I mean by that? And I want to explain this. So you have to be doing something with your money all the time. And doing nothing with your money is still something. It's still an action. And why I say that is because inflation. So if your money is sitting there, it's actually losing money. Now you're like, oh, I got interest from the bank, all this. 0.2% or 0.002% is literally almost nothing. And I know that because I have a little bit of cash and they put that money in my account, and I look at it and I go, wow, what a waste of time. And wow, I should really do something with this money. And even me, sometimes I sit on cash. Right now, I am sitting on a lot more cash than what I've ever had. And I shouldn't be, but I have not quite found exactly where I want to be and what stocks I want to pick, what stocks I want to do, what the market's going to do. So right now we're in a transition time, and I think it's a perfect opportunity for a lot of new traders or investors or people in general, because if you have a 401k or anything like that, you are an investor. Just so you know, you are an investor. You are putting your money somewhere, hopefully hoping to be able to retire one day or anything like that. With that being said, where do you put your money? What plan did you choose for your 401k? Should you invest into dividend stocks? Should you be in income investing, or should you be growth investing? These are all decisions that you're going to have to make on your own, and there's nothing wrong with any of them. It's all your choice. Me personally, I am a cash flow person. I absolutely love cash flow. I love seeing the dividends every month. I love seeing the checks come in the mail every month. That's just me, or quarterly, depending on the stocks that you buy. Me, if you've obviously been on my channel, if you go and look at my channel, you guys know I like monthly dividend stocks. Always have. There are great real estate stocks. There are great financial stocks that you can buy that are monthly dividend stocks. There are REITs, obviously, which is real estate. financials, BDCs. There's multiple different things. Now, again, I do stick to a select few that I like a whole lot more than others. There's also closed-end funds, guys, which is something that I think a lot of people should learn about. Doesn't mean it's going to be for you, but there are some that I do think I put a section of my portfolio into it and during a normal market when I'm not sold out of everything. And right now being sold out sucks because I do think the market is going to drop. Now, that's my personal opinion. That's how I have situated my money. Does not mean you should. Dollar cost averaging is a great thing there's a million different studies out there for that a lot of people do. And I don't think that there's absolutely anything wrong with that if you have no idea and you don't ever want to do anything. The one thing that I don't like any American to do is to be putting money into a 401k if you're just buying the S&P 500 index. Now, with that being said, just take your money and go buy SPY or SPX. You can buy fractional shares of either one of those. Actually, you may not be able to do SPX, but I know you can with SPY, which is also the S&P 500 ETF that holds a ton of the same assets as the SPX, almost pretty much identical. And you're going to get the same return because they literally follow each other. That's what they are based off of. They all have the same assets, so why wouldn't you? And you're not going to pay any fees. That is the big one. What they don't tell you in a 401k is, yes, your employer is going to match it, but you're also going to pay a lot of fees. And by the way, you're also going to get taxed on it. You're like, oh, my money went in pre-tax. Well, no matter what, when you pull that money out, whether you pull it out early or you pull it out when you're 65 or whatever, you still get taxed on that money. So you're like, oh, a Roth IRA. Yes, there is a Roth IRA, and there's a lot of great things you can do, guys, with a Roth IRA. If you aren't maxing out your Roth IRA, I don't understand why not. I don't see a problem. Now, again, you're locking up money, so be careful with that. Maybe if you have the extra income, absolutely max out your Roth IRA. If you don't, put it into a personal account where you can actually move your money. Now, don't get too trade happy. If you find a company that you like, there's a company called Southern Company. If you live in the South, you probably have used them. If you live in Georgia, you live in Houston or Texas, they're big in the South on electricity and their utility. They pay quarterly dividends. I like to own their shares, and then I sell covered calls on them. Right now, I don't have them, and I don't have the cash flow coming in from them right now either. But in the future, as the market is continuing to dip, I am looking to buy back into those stocks, and I do think that that is very important to do, and you should definitely be looking into those. So you have to make the decision on that, whether or not you want to buy those companies now, or you want to buy them later. When you buy later, you take the risk of buying higher or lower. That one's up to you, and that's why timing the market does suck. But you're not going to time it perfectly. I'm not going to time it perfectly. There's probably somebody out there that's going to time it perfectly and told you so. That's great. Tell them to try to time it 10 more times, and we'll see what their results are. I hope they do it 10 out of 10 times. I just doubt it. But that's something that a lot of people should look into. And being able to, again, monthly cash flow is my biggest thing out of everything. Figure out what your investment goals are. If you like growth, go buy growth stocks, go buy tech stocks, things like that. There's also leveraged ETFs like TQQ, SQQQ, that's based off of the Qs, holds a lot of the same assets or assets that mock that ETF. Again, guys, you guys need to do your research. I'm going to put a lot of things up here on the screen. Hopefully I put a lot of things up on the screen in this video showing you the different things. One strategy that I do plan on doing as the market gets better is a covered call strategy, and then the other one is a credit spread. If you go through my channel and you look up, I have videos on all three, and I've talked about all of these things before. So you need to make the decision on what you want to do.